Welcome back to Investing on Purpose. I'm Ryan Daniel Moran. I'm going to be joined by my dear friend, JP Newman. And today we're going to go into economic predictions based on where we are in the cycle. We've done this a few times on the show, so we'll look at our past predictions and also analyze where both JP and I think things are going to be going in the future. We're coming out of the cloud that was COVID. These last 2 years have been so confusing. We've had wild ups and wild downs. So we'll look at where we are right now and what we do with this moving forward. And we'll both talk about how we're evaluating opportunities as we enter the next cycle. Hope you enjoy. JP, we started our last episode where we talked about betting on the jockey. We started that episode talking about how we were entering into a new chapter, how the boom and bust period of COVID is somewhat behind us. We probably have some economic softness, and we'll talk about this. But one thing that I want to go into today is I want to make some actual hard predictions about where we're going next, right? Like so you have experience in multiple cycles. I studied economics, and there are very few rational, reasonable voices right now. We hear the over exuberance during the run up. We hear the over bearishness right now when things are softening. So are you cool to do some actual hard predictions?
Let's do it. There's a 50% chance we're going to be right.
Yeah, that's right. Well, we sort of did this a few months back where we made our predictions, and you said you thought real estate would be pretty stable, but that there would be some downside, but we'd have a slowdown, not a crash.
By the way, the number that I told you, Ryan, was between 15 and 20%.
No, that's not true, JP.
Oh, really?
No. You said 5%, and I said 25 to 30%.
Well, then you're closer, because it's about, depending on where you're at, it's about 15%.
Because you said that you think maybe a 5% slowdown.
Well, Alex will back me up on on an episode that was more recent. I said
okay. So
I hear you.
Jamie from the Joe Rogan podcast, go fact check that. So
there you go.
I believe I called for about a 25% drop.
Okay.
In real estate because we went up 70%. So a 25% drop would be about back to where we were, right? A little bit above, which would be a more linear approach if we didn't have the crazy run up from low interest rates. So, and I also said I thought that the NASDAQ's low would be about 8,000. It hasn't gotten quite that low, but it still might. And that the Dow Jones would bottom 26 to 28,000. And it's sort of flirted with that, but it hasn't actually come down that far. We'll see what happens.
Crypto was going to be down to my Bitcoin was going to get down to 15,000. You forgot that one.
Sorry about that. I think I said Bitcoin. I think Bitcoin will bottom at 13,000. But also we've had these periods where, we've had bear market runs too. And Jerome Powell seemed to say in his last meeting, mission accomplished. He seemed to say, we won, that we beat it. We're going to slow down the rate of hike increases, and you don't fight the Fed. If the Fed is starting to get optimistic, you don't want to fight that. Right. So these are all the things that I am kind of playing with. I personally think the worst is over. I think that now we're going to go through maybe a very long period of slow growth for the next year or two. We're going to go into recovery mode, which means that we still might dip a little bit lower, but overall the craziness is over. What's your take on where we are right now?
I don't disagree with you that much, but I think there's a little more pain ahead of us. I feel like we've been to a really fun party called Let's Print Money Party. Yeah. And we printed a lot of it, trillions, right? And I just think that it's going to take a little bit longer into 2023. So if you want me to make specific forecast, I think you're really going to start to see values reset on all equity markets, stock, real estate, oil and gas. I think you're going to start to see a reset of what the new values are. And it may not be that different. I'm not saying it's going to be a crash, but your real values are going to show up in about...
Give me an example of what would need to reset.
Look, I'll give you an example.
You mentioned oil and gas. I mean, hasn't oil and gas already reset?
Oil and gas is reset, but as you know, it's been very volatile. It's been all over the place. So it's not really stable. When I say reset,
I'm mean stabilized.
What's a new normal? For real estate stabilized, for oil and gas stabilized.
I understand.
For the stock market stabilized. Because, we're seeing these just heck of a lot of volatility. And I think the market will reset. I think the final piece is, to your point, the Fed's already signaled they're going to do a couple more raises on interest rates. And that does affect everything. It affects corporations. It affects how I can borrow money, how real estate people can borrow. And I think you have to know the cost of your capital because it affects everything. It's not so much the interest rate is by whether it's 7, but it's actually the cost of the opportunity, obviously, which creates jobs, which creates people borrowing money for real estate. And I think that they've already kind of signaled that through February, there's likely going to be 2 more hikes up.
Yeah.
And then maybe we'll see from there. Everyone's got their own narrative from there. But that takes us into the end of February. And I think that we need to see once Jerome says no more hikes for a while, I think we've got this, like really means that he said it, which is a great start. But when the Fed stops raising, because at a certain point they have to anyways.
Yeah.
We got to cover debt service here in America, our own debts and what have you. So I don't think it's that far away. I agree with you. We're not that far. But that final adjustment, I think, will be like the final or an idea of what stable markets look like.
So what I'm hearing you say is that if there's 2 more rate hikes and they end in February, that's when we will know where prices will stabilize.
The beginning of price discovery. We're already in some price discovery right now. But yeah, that'll really start to solidify price discovery in all asset classes.
Okay, and we're making predictions here. What do you think that will look like?
So,
and I mean broadly, like economically.
Yeah.
And you can make price predictions too, but overall economically, where do you think we sit?
I think it's going to be not horrific. I don't think we have to run for the hills. I think it's going to be a little worse than people think. I don't think it's going to be just easy peasy. Here's the good news. There is so much capital. Like that's not like unlike past times where capital, like a depression where capital is just no more capital, everything's gone. There is capital dripping. World capital. And guess where they want to be? In America. Even with everything that America is, America is one of the most stable, rule of law places where people want to invest. So I absolutely believe that we are in a very different situation, that if there is some distress in real estate or in equities, so much capital, greed will come in a good way and buy it up. So if you were to ask me specifically, Ryan, I think that you're going to see, you'll see some dips. I think you're going to see higher unemployment. I think you're going to see another 5 to 15% out of real estate. I think you're going to see it's going to come down for a bit. I think the market's going to be very volatile with some probably great buying opportunities, but you got to have some, courage because there's going to be some panic days. People are going to see higher unemployment numbers. They're going to see the beginning of potentially some foreclosures in real estate because the people, always the same thing, people who over leveraged are going to be the first people to get hit hard. So you are going to see some. It won't be blood. I don't believe it's going to be blood in the streets like everybody panicked, but I think there's going to be, when you print $10 trillion, you go through COVID and everything we went through, there's just going to be some pain, but the pain is healthy. This is capitalism, Ryan. We are supposed to reset. And I think it's painful. I don't like it because it affects me too, but it feels actually like healthy to be part of a natural cycle.
I mean, it's definitely healthy compared to where we were. I still have my issues about us ever getting to where we were because we overstimulated and we overprinted.
We did.
And we gave out unemployment checks like crazy in order to fight the shutdown, which we can argue about whether that should have happened. So this is a government created problem. Yes. Whereas if I look at, if we just had a linear approach from end of 2019 to where we are now, things look a lot more predictable, a lot more stable, a lot less freak out-ish. And we'd probably still be talking about some softening or some economic downturns or something like that. It's just, we needed this compared to where we were. I just sometimes wonder, do we need to get to this point? I don't know. But I agree with your point of, I don't think that it's going to be blood in the streets like a lot of our peers think it's going to be.
A lot of people are talking blood in the streets.
Yeah. And I have to comment here on a personal note.
Yeah.
We've both had COVID and I don't know why. I've done so much research into COVID's effects on the brain and I still can't quite like pinpoint my symptoms. I have not been the same since I had COVID.
Yeah.
Right. I panic attacks and anxiety and depression that I've mostly navigated through, but like you saw me at some pretty rough times. I've had COVID twice. I had it after both times. I've never quite been the same. I have to manage it a lot more carefully.
Yeah.
The reason I say this is because during my really dark times after COVID, when I did not have support, didn't know what was going on, didn't have the supplementation or the medication that I needed in order to navigate those times, I was really freaked out about the world. Yeah. I mean, like really freaked out about what was going to happen in the world. And I can't help but wonder if a lot of the people that share their opinion publicly about there being blood in the street are all walking around with COVID brain and long COVID symptoms, and they don't know it, right? A lot of the negativity, I think, is so fearful that I believed that narrative for a little bit.
Yeah.
And once I sort of came above water and was able to look at my own thinking and say, is this really true?
Yeah.
I was able to see how dark the narrative had gotten. And I now no longer think that's going to be the case, which actually makes me the optimist in the room.
Yeah.
In a lot of rooms.
One thing, Ryan, first I want to acknowledge you for just being honest and courageous enough to tell us about your experience. I had the experience after COVID of panic and depression, and it took my brain a while to get out of it. But I think that we should be speaking about it more because it's interesting. I ask people now when they're in COVID, how are you doing? And people, I'm feeling better. I got over it. I'm like, well, actually, man, how are you? And if I share with people, I had some anxiety or depression, and I ask them, a lot of them will say they have the same experience.
Me too.
So I think it's more common than what we're chatting about. I really just giving you a shout out for having the courage to tell people what's going on, because I think a lot of people just don't want to talk about it. It's like, I'm better. I got better from COVID. COVID didn't get me, you know?
I appreciate that, but I bring it up mostly because what our brains create stories, and our stories dictate what we do and how we see the world. And I think that when you're in that chaotic state, it's easy to see the economy going for a melt.
Yeah.
And it's easy to see asset prices crashing, or the US dollar losing its reserve status in the world. Like, it's easy to fall into these narratives and paint this picture of the end of America and blood in the streets. But if you can pull your head up and say, like, is this really true? I have had the experience of having a much more stable, much more optimistic, calmer view, which makes me think about, all right, it's going to be time to strike soon. It's going to be time to be aggressive soon. It's going to be time to start the next chapter soon. And that is a much more empowering story to tell myself, even if I'm wrong. It's a much more empowering story than everything's going to
just crap. Remember, we've said this a couple of times, Ryan, like most businesses, like when there's death of some of the old fat, like business structures that don't work anymore, that didn't innovate, it creates wonderful opportunities and gaps in the marketplace for startups. So a lot of startups get started up during these cycles that, this is when the seeds are planted. In real estate, we're not quite there, but we're getting closer and closer to the most optimal. We've talked about the 4 stages of real estate in the cycle. Yeah. We're about to hit one of the most attractive times, which is during a reset. And that the key is you have to have money when other people don't. And then you have to have faith when other people don't, which is exactly what you're talking about. But having done this a couple of times, like, I am clear as a bell. I'm raising money now aggressively because I want to have dry powder with it. When things get rougher, it may not be blood in the street, but there will be opportunities. There just will be. And that's part of what the cycle is.
That's interesting that you're doing it. You're raising the capital now so that you can strike.
Yes.
And that means that
maybe a year early. Like, I don't know exactly when, but I know it's coming.
But it means that you can envision another side.
Oh, for sure.
Right? And I think that's, like, I work with entrepreneurs, right? You work with investors. I work with entrepreneurs. Yeah. And on the entrepreneur side, I've been an entrepreneur for 16 years, which is nuts because I'm 35, right? Yeah. So I've been an entrepreneur since I was 18, and I was an entrepreneur during the 2008 recession. I was only 2 years in or 3 years in, but I was still, an entrepreneur. And I see the same narrative starting to play out again, where you have entrepreneurs who are like, it's over, running from the hills or losing money. And the people who haven't gone through a cycle are the ones who are freaking out the most. Right. They're the ones who are the most scared. It's just like the first time you go through a Bitcoin winter and you get punched in the face, a bunch of people get flushed out of the market. If you have been in it for a long time, you're like, par for the course, this is going to happen.
Yeah.
And so it's nice to hear from somebody who's been through a few cycles, who is like, there's going to be another side. Well, like, there's obviously going to be another side.
They're just cycles. They're just stories. And we create them. We create these stories. We create these cycles, but we need to. You don't want anything to go one direction. Could you imagine if your house went up 20% every year? just kept going in one direction? That wouldn't be good.
Well, it reminds
you wouldn't cycle for young people to get a chance to buy a house.
That's right. So for you, I know you were selling some assets in the last couple of years. So you were prepping yourself for it to be the end of the cycle, the beginning of a new cycle, which means that now you might be early and you're probably telling your investors, hey, we're early, but we want to be prepared when it's time to strike.
Yeah.
And so you will know that it's time to strike when? Is it when interest rates stabilize? Tell me what that looks like.
Yeah, you just nailed it, Ryan. I think that right now, but I had a closing here. We sold an apartment and it closed 3 weeks ago, but the people put up money 6 months ago. They put up almost $1 million non-refundable. So they had to close. So their interest rates were 4.5 when they made us the offer, and it was 7 by the time they closed. They stalled, but they didn't want to lose their $1 million.
Yeah.
And the broker said we might have had the last apartment transaction in the old cycle. They said, congratulations, you might have had the best timing. And they joked as I ate my lobster tail. They're like, this might be the last big meal we take you guys out to for a while. Enjoy the lobster. But it was awesome. It was a great return. Great return. Great experience.
And so that essentially means that we're all seeing the end of the sell cycle.
End of the sell cycle.
And now so now we're in free fall, if you will. I know that's an extreme way to put it, but now we're falling.
We're in price discovery.
Okay, that's a good way to put it.
Price discovery.
And when we have stabilization, which will require more predictable interest rates, that's when we'll be able to see where the quality investments are.
Yes. So part of it is
I'm getting my brain wants to I want to deploy capital. I want to know what it is. And you're saying chill.
I'm even doing less investments right now. I'm trying to keep your whatever powder you have, try to keep it dry. There's going to be some things that might, even though there's a lot of capital in the marketplace, there'll be some discounts out there. How much of a discount, we'll find out. If the news goes on longer, there will be longer discounts. If it's short, because if all of a sudden you start to see, you are going to see cracks in real estate, by the way. Like in commercial real estate, all of us, including myself, I won't get into the whole story, but basically to make these deals work, once prices got so expensive, everybody was doing short-term bridge lending. When you do bridge lending, which bridge just simply means it's a bridge for 1 to 3 years, or 1 to 4 years, it's a lower rate. So your deal works on a spreadsheet. So it's a lower interest rate. It's like a teaser rate you start with, but then it adjusts. It's a variable.
Oh, yeah.
So all of a sudden, if a bank says, hey, I know you got it at 3 years go by, and now your interest rate's 7 or 8. Hey, your payment just went up $50,000 a month. And if you want to get a new loan from us, you need to put up $5 or $6 million more because the property went down in value, because now your interest rate's so expensive, your expenses went up, your income's gone down because your expenses have gone up over interest. So if you want to continue owning this property, come up with $5 million in cash. And some people will be able to do it and some people won't.
And there's a lot of that, I hear.
Tons of that. Most of commercial real estate, that's exactly how it's been funded.
I don't remember who I was talking to, but just this past week, I was talking to someone who made their money in business, the same type of business that I'm in, an internet-based business. And they deployed $20 million into real estate using these bridge capital.
Right.
And next year, those loan payments are going to have to reset.
Right. And
I asked him, what are you going to do? His answer was, I have a year to figure that out.
That's a very honest answer.
Yeah.
And by the way, right, I still own over 3,800 units. So it's not, as clever as it was to sell 8,000 units, I still own 3,800 units. I have a lot of strategies behind them. But the truth is, if the market if interest rates stay high for a long period of time, it'll be more extreme in the commercial real estate market as far as that price. It can go from moderate to worse. It just depends how long, because people like your friend, I'm more, because of how I did it, have 2 years. But at a certain point, interest rates have a huge difference. I have one property right now where my payment went up $120,000 a month. $120,000 a month.
That took my brain 3 seconds to actually
from January,
solidify. What?
From January to today, my payment's up about $120,000.
Oh my goodness.
Yeah. Now I've got capital to do it. Is it putting pressure on me? It absolutely is.
So I'm sorry for the dumb question here, JP. Where does that money go? Does that go to the banks?
Goes to the banks.
But they're borrowing
at a higher rate.
But they're borrowing from the Fed, right? So is a lot of that flowing to the Fed?
Yes. It's flowing. Yeah. The cost of borrowing is higher. So the Fed's collecting more on the borrowing side. And it actually does create more profit margin for the banks. So when interest rates are higher, there's certain fees they're collecting and certain other things. It actually and it also depends on what they're charging for spread. So if many banks aren't lending, then you know what, then your margin, you say, screw it, you want my money, and the banks are going to make a higher profit. If everyone's lending, then the spread goes down, meaning that the cost to borrow the capital versus the cost of lending at it, that spread goes thin. But if there's many banks lending money, then it's like an entrepreneur. Then the supply of money is cheap and the spreads go open. But right now they're tight. So banks are kind of having, the banks that are lending, the banks that are active right now are in a pretty good spot.
Interesting. That explains why there are some banking companies doing really well.
Yeah,
are starting to recover. Let's talk about the good side of this, right? Because so many of our peers are so negative right now, but we started this conversation looking at, we don't think it's going to be as bad as a lot of people think, right? It's going to hurt. This is going to be a softening.
Right.
I see it more as an asset price recession more than a productivity recession. And to me, on the entrepreneur side, it's really good news. Like, I think right now is actually a better time to get into business than during the crazy run up.
Yeah.
When there were supply chain issues and when everybody's buying online and you have no strategy, you're just throwing things everywhere. Right now is a really interesting time to sort of reset and to start something new.
Yeah.
And one of the things I hope we get to talk about is I'm analyzing my next moves because I feel pulled in lots of directions because I see lots of opportunities. But I think right now, while everybody else is freaking out, not starting businesses, not investing, is a really good time to rub your hands together and say, like, is business time. Our mutual friend, Brooke Castillo, has what she calls the model. And it's a way of analyzing your thoughts and seeing how your thoughts create certain actions that you take.
Right.
And once you see and believe in what she's talking about, how our thoughts create our feelings and our feelings create our actions and our actions create the results that we have in our life. Most of the people who are talking about the economy right now are thinking the thought, everything's about to melt. And so what is that doing? It's making them feel fear. Well, what do you do when you feel fear? You hold back.
Totally.
And what happens when you hold back? You don't create any results in your life.
Right.
But if you were to change that thought to say, there's about to be a lot of opportunities, or now's a really good time to start getting busy while everybody else is sitting on their laurels.
Yeah.
What emotion does that create? Creates like some anticipation, some excitement.
I'm pretty excited.
Yeah, you are.
I'm flying all over the place speaking again. I'm doing my thing.
Yeah.
It feels like the olden days where I get to like raise money and like it's a great time to expand the company.
Yeah, it's like it feels like it's time to hustle.
It's time.
And
that's a great way to say it.
And JP, we have so lost our hustle.
Yeah.
Because it's been so crazy. I
know.
Right?
No, it's been fun. It's been fun getting out there. It kind of reminds me of the early, I call it like, startup energy.
Yes.
It's great.
And when you really believe in like when you feel on purpose for what you're doing, hustle's the best.
It is.
It's the best.
It's energy. It's like energy. Ryan, too, I think that
I'm sorry, I just had this thought, JP.
Go ahead.
All right. So much of the burnout that we feel like I burnt out.
Yeah.
Right. And COVID burnt out a lot of people and a lot of entrepreneurs burnt out. I just had this thought, JP. Oh, we're out of time.
Next episode.
The burnout that so many entrepreneurs felt, I can't help but wonder if that was due to the crazy run up in price and asset appreciation and go, and everybody's making money, but the loss of purpose that happened during that. Because for a while, if money is so good and available, you can get away from your purpose. Your brain can justify being out of alignment with what you want to do because the money justifies it. But when that dries up and we go through a cycle, you're just burnt out.
Yeah.
You're just toast.
Yeah.
And I wonder if what is happening for me is I'm starting to slow down and come in alignment back with my purpose.
Yeah.
And now I want to hustle.
Yeah.
Right? I did not want to hustle a year ago. I could barely get out of bed a year ago. Right?
You and I were talking about this, Ryan. Like that's how it's been for me. I don't present the same way. It's about mission and purpose and what have you. The other thing, Ryan, I'm going to go off a little bit on an impact, if I can. There is the thing we don't talk about when I'm in these rooms, these mastermind rooms, and people are paying big money to be there and what have you, is that there is in America and a lot of places the haves and the have-nots. So when gas goes to $4 a gallon, you and I, you have a Tesla, so you don't care.
Yeah.
But my point is, like, unfortunately, this impacts inflation and these things. Rents are up 10% quarter over quarter. So this is real, and not everyone's going to be. Most people won't be able to take I say take advantage. Most people won't be able to participate in this. And I just want to drop in. And I noticed, to your point, this when you talk about the collective angst, it is so important that we all take a moment. Whoever is like listening to this podcast, like if you're in a position where you're an entrepreneur, you're either launching a business or you've successfully launched a business, to take a moment to realize the responsibility that we get to even talk about these things. These are pretty high class conversations we have to have. Most of the population, this is not going to be a party for. They don't get to participate in the ups or the spread or what have you. And so we just got over a global pandemic. The economy is going to really strain people. The cost of housing, the cost of everything is going to be up. There's a lot of feeling of political insecurity in general, whether it's COVID brain or just, there is a collective angst about, are we safe?
I appreciate
Are we safe and are we safe for the future? And the reason why I mentioned that, Ryan, I think it's going to be really, really, really important. And this goes back to the whole purpose of the podcast, that entrepreneurs are going to have to come up with a product. They don't have to. I think they'll be more successful coming up with a product or service that taps in to people, especially if your product's targeted towards mass populations and not some high-end financial project, which is I feel you, I see you. So it's taking responsibility. It's a lot of what we keep talking about leaning into your own creativity, your own why. But then on the other side of that, marketing and communicating to the end person. I see you. I recognize you, and I'm here for you. And all I know, those three things is mostly what's going through my mind these days, because I know with my apartments, I could just talk about my investors. What really matters are the 41 million Americans who are the work for your policemen, firemen, and teachers who just got a 10% raise. Not because even landlords are going so crazy. Our cost, everything is up. So we're feeling the pinch too, but who feels the pinch the most? Middle class, blue collar, white collar, they're getting the pinch. So I think just having that recognition in your product and the messaging, that recognition will be a game changer, whether you have an existing product or you're launching a new product.
I appreciate that. And that lands with me particularly right now, because where I've been at in my personal journey is I feel like I feel torn sometimes between I'm excited for the slowdown because I want to recalibrate. Like I want to recalibrate to my purpose. And like, that's been a really nice experience, combined with, all right, I'm feeling the slowdown, but I also so badly want to be Alex Hormozy.
Yeah.
Right. I want to be my friend Alex. Like I want to be Gary V. I want to be people who I perceive as crushing it some more. And then it asks it what it's doing. And it says, you're crushing me. Right. So like, I want to do that. And so to remember that even us talking about this is like, we're in a position that most of America will not be in.
Yeah, if you're listening to this episode, you probably are too, whether your net worth is whatever, it's beyond net worth. The fact that you're having these conversations, I call them the rich dad, poor dad conversations. You're just, financial literacy is way beyond what most people are even at.
Yeah, you're able to transcend the day-to-day fear.
Yeah.
And you can think about where are you going to deploy capital for long term.
Yeah. So Ron, I have a question for you. Why is that important to you?
Which piece?
The part of like, hey, whether you talk about Alex or you talk about, wanting to feel like you're in that, what is that? Or Gary V, like, what's that about for you?
Well, it's different between Alex and Gary.
Okay.
Right? Gary, I see as just so on purpose. I covet that energy.
Great.
Right?
He's so on purpose for mission, or just so on purpose, like intentful for what he wants to create? Intentful
for what he wants to create.
Right.
Right. And Alex, I've always said Alex just makes me feel like the fat kid at the gym. Whenever I'm around Alex, I just feel like, oh, I'm the fat kid at the gym that is like, I got to get out of here. I don't belong here. But the best thing he should do is just stay in the gym and feel uncomfortable and lift something. Yeah. Right. And it's not going to, he just makes me want to step up my game. Right. So they both represent some aspect of myself that I desire to see more of.
Yeah.
But I know that if I try to emulate them too quickly, then I get completely out of alignment and then I burn out. So I've been embracing sort of the slowdown as an opportunity to kind of recenter, recalibrate, be more on purpose, because I think both of those men are on purpose, and that is why they've had the success they've had.
I love it. I definitely can relate to that. I definitely, for a while I was kind of, I've had conversations where like, Do I sit the cycle out? I just had an 11-year cycle. Who gets an 11-year real estate cycle? Maybe I was done. Just golf or whatever. I don't know. Get involved in nonprofits or do whatever have you. And then I've got my partners and some of the young staff. They want to double or maybe even triple the size of Thrive. And I was really contemplating. I didn't want to make a decision. You and I have had long conversations about this. But what's really motivating me is the more and more I ask my brain the why I want to do that. And for me, it really is like partly is I want to be the most like cutting edge progressive. It's not size. It's not even size, but it's like private equity firm in multifamily real estate that's really bringing good to the residents. So like, it's really the purpose of the whole podcast, right? Like, I want to continue being a living, breathing example of how bringing intent and why and purpose can create outsized returns. And so that kind of like really more than, sure, it's great to have more money, but yeah, even that, I'm like, what do you do with it? I'm starting to have questions to like, what do you do with that money? That would be even meaningful or interesting. But that is actually, as we formulate, because it takes a lot of energy to go mission statement and hire staff. And it's really taking a lot of my energy. And I just realized without the fuel of that, like why we're doing it and what's it going to look like or feel like, love of strangers, particularly apartment residents, proving to the world this podcast that I want to be, we interview all these CEOs that have had outsized returns. And I have too, but I want to double down on that because it just sounds fun.
Well, I've had the same conclusion, but I think about it differently. Where I've gotten punched in the mouth so many times because I've gotten away from my core thesis.
Yeah.
Right. And you've had some of that in real estate too.
For sure.
So I feel more like I'm just done getting punched in the mouth in the sense of if I'm going to get punched in the mouth, I want to believe in what I did.
Great.
Like if I'm going to get punched in the mouth, it's to be like, yeah, but it still mattered.
Yeah.
Like financially, I could get kicked in the nuts, but be like, I still did good work.
Yeah.
Like that is the life I want to live.
I love that.
Not being afraid to get punched in the mouth because it matters. If I get punched in the mouth, it was for something. Whereas when I've gotten punched in the mouth and it hurt the most, is because I did it for the money. And so I got hit for the money and well, you didn't have purpose or money. You lost both. And so you might as well just center in on like what matters to you and let the chips fall where they're going to fall.
Yeah.
That's how I have sort of recalibrated to purpose during
I get
this.
it. I think it's awesome. Let's kind of end it here. I was just going to say, I would love to offer if anybody wants to ask questions or thoughts. You're really hearing Ryan and I kind of a stream of consciousness. It's so much fun, Ryan, with our friendship to like watch the evolution for both of us.
Yeah.
So I really thank you for the conversation. I would encourage you to come in and ask questions that we can answer. Investing on purpose at Gmail, right? investingonpurpose@gmail.com. Would love to get your thoughts or how you're doing purpose. Anything from economic questions or just navigating these conversations. We'd love to hear from you.
Good to see you, bud.
Good to see you, bud. Deuces.